mostly well looked at the end of the day. Obviously, we had the role that we had in advertising wasn't actually there.
Hello everyone, welcome to today's live session. There's a lot going on this week, really busy week this week. Let me just put the risk warning up first of all. And of course, last week we did see US stock markets, the S&P 500 on Friday, finish off at fresh all-time highs. So we're going to start off by looking at stock markets this week because a strong finish on a Friday would normally mean we'd expect more of the same, really, more strength this week. We've seen the DAX quite volatile this morning, so we'll take a look at that. But also, in addition to increased volatility for all sorts of markets at the end of last week, what we also had, what was I going to say? What we can also look forward to this week, I think, is maybe lots more volatility. Here's some of the data coming out this week, some of the major stuff that I've picked up on. So tomorrow morning, there's European unemployment numbers at 10, European GDP at 10, Wednesday morning, UK manufacturing, the usual crude oil inventories Wednesday afternoon. Then Wednesday night, the latest interest rate decision in the US. No changes expected, but normally plenty of volatility around this. Then Thursday lunchtime, 12 o'clock, Bank of England, interest rate decision. As usual, no changes here. But any commentary they give around Brexit, around the economy, we can normally see a bit of volatility. Then Friday, UK PMI data, European inflation data, and of course, 1:30 on Friday, the US non-farm payrolls. So the monthly unemployment data from the US. So as usual, we'll do the webinar on Friday and we'll start it at 1:15. Any questions while we're going through the markets? If you want to have a look at something different, just use the chat button on not the chat button, the messaging thing on YouTube, and I'll keep an eye on them and we'll cover any stuff that people want to see at the end. But I think today we have to start with US stock markets because of the strength that we saw end of last week. So this is the S&P 500. As usual, we'll take a look at the Dow, the NASDAQ, then we'll bring it back to European markets, DAX and the FTSE. But this is where we are. So Friday night, we saw the S&P 500 finish off at all-time highs, taking out, I think, just about the old all-time highs, about 42.5 from September, October last year. And it is this incredible recovery we've seen. The lows from Christmas Eve at about 23.45. The market is, 600 points higher? So that's a 25%, something like that, almost 25% move in the space of just over 4 months. So it has been just an incredible move. Let's take a look on the hourly charts. But looking at this, if we're going to, the question now, whenever we see markets break out like this, traditionally it's seen as a really positive sign, a breakout to the upside, breaking through major levels. The question now is, how does the market react? And I think, as usual, what's going to be interesting is if we get a half decent sell-off. Do we see the buyers come back in thinking they've missed out and looking to push these markets higher again? So this is where we are. This is the S&P 500 on the hourlies. So I think going into today, the obvious levels to watch, these lows from the end of last week. So Thursday's lows were around about 29.12. The low during actual trading on Friday was about 29.17. So I would say this whole 29.10 to 29.20 band is one to watch on the S&P if we see this market come under a little bit of pressure, a little bit of profit taking, whatever you want to call it. But make no mistake, famous last words. These are strong markets. This strength has just continued this year and has wrong-footed an awful lot of people. So looking for any pullbacks to be a buying opportunity. What's the next target? I think the obvious one is 3,000 on the S&P. It's 60 points away from where we are now. When it gets moving, it only took about a week and a half to do the last 60 points. So 3,000 is a big psychological level. Seems like an obvious one to look at. Let's take a look at the Dow, then we'll do the NASDAQ, then we'll have a look at these European markets. So here's the Dow. Let's flip this over to a daily chart. So we're not quite there on the Dow by the looks of it. Okay, so the Dow is only 30 stocks. So we haven't quite burst through those old highs from last year, those old all-time highs. If I can get my words out, let me just have a quick look at what the official high is for the Dow. So it's 3rd of October 2018, and back then it traded as high as 26,950. So we're still a way away. We're 400 points away from that on the Dow at the moment. So not quite as convincing as the S&P. But again, going into today, the levels to watch, the first levels, those Thursday, Friday lows, also the lows for the last couple of weeks in April, 26,300. That's the big level to watch on the Dow. So let's see what happens. And NASDAQ, then we'll bring it back to Europe. NASDAQ 100, here we go. So let's have a look at that daily chart. So there's the NASDAQ. We did see fresh all-time highs on the NASDAQ earlier last week. So again, going into today, we're expecting strength. If we see any weakness, we're expecting the buyers to come back out. Let's flip it to the hourly. There you go, a bit choppier trading the last couple of days of last week on the NASDAQ. But for me, the line in the sand, the obvious level, these lows from, am I getting the day right? Friday was the 26th, wasn't it? These lows around about 77.35. After that, bigger lows at 76.40. So for me, I think the opportunity is if we see a big sell-off, I will not be thinking, oh, this is the top. I'll be thinking, okay, where are we going to see the buyers come back in and snap these markets higher? So a really positive finish for US markets. So let's take a look at the DAX. The DAX is interesting this morning. Let's have a look at this one. Let's have a look at the big picture first of all. So this is where we are on the dailies. That recovery from whenever it was, December, still going strong. The market's put on about 2,000 points since the December lows. So not far off 20%. A bit of a hurdle coming up here from September the 20th, around about 12,475. Very overbought, as you would expect. This is a 10-day RSI that we're looking at, so really overbought there. But again, considering these markets are so strong, what we're looking at are maybe some levels to get in on if we see it sell off. So again, I think the first thing, maybe the Thursday lows down here, 12,250-ish, so around 60 points below where we're trading now, then 12,200, then 12,100. You can see just all these pockets of support left. But let me just flip this over to a 5-minute chart, because we've seen, look at that this morning. We've seen a fair old swing this morning. So the DAX, because the S&P and the overnight market has pushed higher again. So the DAX had a bit of a run about 9 o'clock this morning, traded up to 12,385, but you can look at the turnaround. So we've really turned around sharply, lost 80 points in the last hour, the DAX. And I think what's going to be interesting, I'm expecting the buyers to come back in. The only question is where, I think. So already on the DAX, I think if you're watching markets this morning, DAX is one to watch and see, keep looking at these sort of levels, 12,290, 12,270. So these are the Friday lows, aren't they? The Friday lows from 12,270 through to 12,290. So I'd be watching to see if we see some sort of strength coming back in. If I was looking to be a buyer now, that would be the closest I would want my stop in this market, the other side of those lows from Friday. So a bit of a turnaround. It has stabilized over the last quarter of an hour or so ahead of 12,300. So I think that's an interesting one to watch for short-term traders for the rest of today. Right, last stock market, and then we'll get into other markets. So we're going to take a look at the FTSE 100. So the UK market, let's bring that up. There we go. So UK market, a little bit lackluster, not getting dragged up on Friday with the S&P, but the recovery from December still going strong. Again, let's flip this over to an hourly. Here we go. So we've got levels left from Friday. These Friday lows are important, I think, to short-term traders. Levels left from Friday at 7,400. After that, bigger level from mid-April at 7,390. So again, looking at it now, it'd be for me, obviously it's not financial advice, but potentially looks like a buying opportunity down here with stops somewhere the other side of 7,400, I think. So, but I suppose if you wanted to construct a negative argument for stock markets at the moment, you could say, well, the S&P hit fresh all-time highs, but the Dow hasn't, and the FTSE hasn't, and the DAX hasn't. So maybe the S&P is getting a little bit ahead of itself. Maybe that's one way of looking at it. But personally, I would still be looking for buying opportunities in these markets in the face of weakness, because we've got so much strength down here, so much support down here. Let's see what today brings. But I think it's going to be, it's got the potential definitely for being a volatile week this week, because there's so much stuff coming out and culminating in the payrolls on Friday at 1:30. Okay, so that stock market's done. So let's take a look. Let's take a look at crude oil. I did utter the famous last words on Friday. I'd be very surprised if crude oil just goes sailing through $63 a barrel. And that's exactly what it did on Friday. So it did try and hold for a bit around about 63.60. But it traded as low as, what, 62.30. And we're hovering around those levels now. So let's just see, this is a big sell-off for crude oil end of last week. Big relative to the sort of moves we've been seeing this year. You know, we have seen this enormous recovery from $42.50 a barrel in late December, up as high as 66. So a 50% move in the price of crude and a bit more. Very little in the way of decent sell-offs along the way. You know, we've got to go back to Feb really to see the market move from 56 down to 51. So a $5 sell-off. So the move we've seen end of last week, you know, it is a significant one. But again, for me, for now, I'd be betting that trend is going to try and resume. You know, because we had seen such a strong move higher. Looking on the RSI case, it's 40%. It's the lowest it's been. Actually, it's the lowest it's been this year. That's incredible. That shows just how relentless this rise has been on oil. Okay, and we're only at. It's not as if it's oversold. You know, we're only at 40% on the RSI, but it is the lowest it's been. So that does show how big that sell-off in crude has been end of last week. So for me, another one to watch this week, looking to see if these old levels hold. Let's take a look at what we should be watching. So let's take this out. Here we go. So 63 got bust on Friday. So I think there's a couple of ways of looking at this. I think the aggressive trade, which is not what I would do, but the aggressive trade, watch to see if we get a bit of stability over the next couple of hours, then stops under Friday's low. So Friday's low was 62.29. I'd be tempted to not do that and just stand aside and see how it performs the rest of the day. But we do have really big support coming in on the short-term chart ahead of 61.5. So it's really interesting. You know, clearly at some point trends end. So there is always the chance that the sell-off last week was the start of the end of the trend for oil. But for now, as a good trend follower, I am banking for the buyers to come back in. There was someone saying, where can I get the software you're using from? If you're a client of Capital.com, this is our desktop browser application. So there should be a link that I put a bit higher up in the chat. If you go there, you can open an account and get access to this. Let's see what happens down here. Okay, so I'm looking to see if it bounces. If we start losing, these old supports, we're really sort of teeing up at this massive level at 58 that we were watching for ages, it feels like, in Feb and through much of March. 58 was an enormous level for oil. So let's see what happens. But personally, be looking to see if it starts to snap back from here. And the big support for me is 61.50. More aggressive traders might want to pick up on Friday's lows around about 62.30. Let's see what happens. Gold, right? Gold did have a bit of a run end of last week. I think I did say on Wednesday's thing last week, because we were looking at that old trend from, where's it from? Was it from August last year, I think, isn't it? Where we're saying, well, okay, if the market had been trending higher, looking at that, this is the gold price on a daily chart recovering. And I think when we were doing it, maybe it was a week ago, I can't remember, but saying that okay, if it's going to bounce from anywhere, it's here. And so far, we have seen that gold price hold above that recovery trend. So for me, the big line in the sand are these lows from last week, around about 1265, let's call it. But you could also say, of course, we're still in this correction for gold that's been going on for what is it, a couple of months now. Looking something like that. So that's like the sort of the price action view on gold. And I think we clearly need to break 1300 to try and set up more of a recovery from here. But I think it's interesting. Yeah, it's interesting now to see exactly how this is going to resolve itself. So for now, still under a bit of pressure, but that 8-month recovery is still just about intact, assuming the sort of 1260, 1265 level holds. Let's take a look on the hourlies. Here's our hourly chart. So we had that US GDP data out on Friday. I think it came in stronger than expected. US economy stronger than expected. So that definitely helped stock markets push higher. Quite a bit of volatility. You can see the spike on gold. But arguably, we've still got our little uptrend chugging away from the 23rd of April. Okay, so if I was trading it on a short-term time frame, I'd be looking at this sort of view, and expecting that the low 1270s through to 1280, I think is an interesting area if we're going to see this start to recover. So my money at the moment would be on, I think we could see another push back up to the Friday highs at 1288. Let's see what happens. And if we can move through there, then we're going to be targeting 1300. So I think it's going to be another interesting week for the gold price down here. Someone asked for silver actually in the question. So while we're on gold, let's take a quick look at silver, because I think silver has been the underperformer compared to gold anyway. Let's flip this over to a daily chart. I think let's have a look at that. So let's go right back, because I remember we looked at this a few weeks ago on silver, and it's interesting that it has been going in a different direction. I suppose if we picked up on the trend from up there and then down there, something like that. And I remember when we were looking at it, so it would have been maybe end of Jan, early Feb, thinking, well, is this actually the break, finally the breakout from this 3-year slide lower in the price of silver? And so far, it hasn't been. We hadn't seen it have a go, and then bang, it's just drifting lower again. And I think for now, let's say you were going to do like a pairs trade, you'd be personally be a buyer of gold and a seller of silver, because silver still looks a little bit weak. We've got support at about $14.75 on silver, but it just seems to struggle to hang on to any recovery. So I think it's a bit messy, the silver charts, and maybe the risk is for a bit more of a drift on silver from these sort of levels. Currencies, we'll look at the euro, and then we'll look at the pound, and then we will have a look at Bitcoin, and then I'll answer any other questions that come in. So hang on, where's my let's do the pound first. I think the pound, it's like I've been saying for a while now, I think it's an odd market, pound against the dollar, because of what's going on with Brexit, or not going on with Brexit. And we just have a lack of volatility. You can see it spent much of March just trading in this sideways range. It slipped a little bit lower last week. It traded as low as the low 129s last week. We are seeing something of a bounce back. I think there's big support at 27.70. I just think it's a hard one to call. Arguably the trend for the last 6 weeks is still down. Let's have a look at that on the hourlies. There we go. So it looks something like that the last 6 weeks. So we do get recoveries, only for them to run out of steam. So I think depending on where you were picking up on that trend, let's see what that looks like. Hang on, why that clicked off? Hold on a sec. So I suppose we could take it off these highs, these mid-March highs, down to maybe something like that. So arguably, looking at that, we should still be a seller. This area around about 130.30, so 90 points higher than where we are now, still looks like a barrier. It has gone overbought this morning, about 9 o'clock this morning, it's gone overbought, struggling maybe a little bit with Friday's high. So again, the aggressive trade could be to be a seller here with a stop above the highs for the day so far, maybe better stops up above these April 24th highs, around about 129.65. So I think it still looks a little bit vulnerable, pound against the dollar. And it is an odd market because it will do nothing for ages. Something will happen or be said about Brexit, and suddenly the market goes crazy. So there you go. Who knows with the pound? The euro again is another, you know, it's a strange one because we saw that move last week on the euro to its lowest level since June 2017. So we've seen the euro, just to recap, it forms strong support, then it breaks it. This is November, but it doesn't follow through. Then we saw the same thing again, strong support, and it breaks it in March, but no follow through. This time round, strong support, and it broke it. We've seen a bit more follow through, but a recovery. So again, I think as I was saying on Friday, that maybe the aggressive trade here is to assume this is yet another false breakout for euro dollar, be a buyer, and a stop loss under the 111 lows. The RSI is tying in with that. We've got, you know, oversold on this break on the RSI. We'll see. It's just a really, really strange market. I mean, it is drifting lower overall, you know, so let's not expect it to be trading at 120 anytime soon. But again, maybe in the short term at least, let's look on the hourlies. That sell-off is, if you think it's overdone, you've got an obvious level for your stop, you know, just below those lows from Friday. Let's see what happens, what this week brings for euro US dollar. And then finally, Bitcoin. So Bitcoin's a little bit drifty. I think was there a story about something getting hacked over the weekend? But I still think it's interesting. You know, it has that's a big move we saw last week. I still think it's maybe the most positive it's looked for some time, Bitcoin. We had this big move in early April, took out all these old highs from back to November, late November. We have seen it follow through higher last week, gets clobbered a little bit, but a bit more stability coming in. So that if I was a buyer of Bitcoin, the closest I would want my stop is below this 47.50, 47.50-ish low from early in April. But let's see what happens with Bitcoin. If you have a look on the hourlies, are there any sensible levels on the hourlies? No, you can see since that sharp move last week, trading pretty sideways overall. But I think the move we've seen beginning of April, you know, is arguably the most positive it's looked for some time. Right, someone's come in and said, can we have a look at sterling against the Australian dollar? So let's bring that one up in a second. GBP, Aussie dollar. And then if there's no more questions, I think we're going to be done. So here we go on the dailies. Let's just take it back and see where we are from the big picture point of view. So it's a weird one, isn't it? It's for the last year, it sort of trades up to 185, pushes higher, and then sells off, pushes higher again, and then sells off. So I don't know, to be honest. I think it's quite a confusing picture because you could say, well, the trend from December looks something like that. We've broken out of that trend, but you could almost argue, I think, that we're breaking out of this correction. Oh, if I could draw it correctly, that we're breaking out of this correction here, just about. So I suppose the aggressive trades, well, it's not even that aggressive. If I was a buyer now, I'd want a stop loss underneath these old lows. But maybe the more interesting thing to do is wait to see, does it sell back off to these lows from mid-April, and do we see some strength coming? It looks a little bit, not quite sure it knows what it's doing at the moment, I think, sterling Aussie. So let's see. Someone said, going back to crude oil, would you look to sell long-term potentially? What economic events could move the oil market this week? Okay, that's a good question. Let's have a look at that. I wouldn't sell, definitely. Just yet. Because, you know, we'd had that big run up last year up to 77, the correction, and now the recovery. So personally, I wouldn't be a seller just yet. There we go. So I'd be looking at that as the recovery. I suppose you could say, because the trend has been so sharp, it is threatening that trend line. But for me, I think if it goes below 58, then maybe maybe then we're finally seeing a shift in trend. But when it comes to economic events, the obvious one is the crude oil inventories on whenever it was, Wednesday of this week. But we have I've lost that sheet I was looking at the beginning with the economic data. We've got so much economic data coming out this week. There's non-farm payrolls on Friday. That's going to affect the oil price. US interest rate decision on Wednesday night, that would normally have an effect. So I think there's plenty happening this week that could move oil. But for me, I'd still be tempted to be thinking about some sort of snapback from these levels after the sell-off we saw last week. Let's have a look. So someone's asking for coffee. Let's have a look at coffee. That's not a market we look at very often, is it? Let's have a look at coffee. I think the price of coffee has been drifting. But so we've got two flavors of coffee. Let's go with a Robusta. So look at that. There we go. Look at that. Let's take that right out. How much data have we got on coffee? Okay. So we're going all the way back here. So back in 2011, coffee was whatever that is, 24.60. So it's halved. The price of coffee is halved in the last 8 years. And it's still weak. Last week we saw it hit its lowest since about, when was it? 2016. But we have, in the past for coffee, 12.50 to 13.50 has been a floor. So whilst I wouldn't be a buyer just yet, I think it's maybe an interesting market to track. Let's make this a weekly chart. Maybe it's an interesting market to track from from a value point of view, because we have seen rallies for coffee from this area over the last 5 years or so. So maybe I wouldn't be in a hurry to buy it just yet, but it could be worth keeping an eye on. It has gone, this is the weekly chart we're looking at. It has gone oversold. So I suppose if you were really going to take I've never traded it. If you were going to take a really long-term position on coffee or like a coffee ETF or something like that, now is as good a place as any to buy if you're going to hold for the long term and see if the thing switches round and goes back up to the highs from a couple of years ago. It's an interesting market. So let's keep sort of dropping in and out of it and see what it looks like. Sterling yen. Okay, I was wondering where you were today. We didn't have our sterling yen request. Let's bring up sterling yen. GBP, JPY. Let's bring that up. Daily chart. That's what we want. There we go. That's it. Really interesting, isn't it? That level's held again, isn't it? We were talking about that last week, weren't we? That level has held again on sterling yen, so it's pretty sideways since Feb. But if we flip it, it's maybe a 4-hour chart. Here we go. You can see just what a floor 143.75 has been on sterling yen. Yeah. So again, where do we think it's going to go from here? Well, if we're basing on what how the market's traded the last couple of months, it would be expecting, when we have seen it, buyers come back in. So if I was a buyer, I'd want my stop the other side of 143.75. The flip side of that is if we see 143.75 broken, you'd expect there to be a lot of stops below there and for quite a chunky sell-off. But for now, that level has done the business yet again, and it's held. Yeah, so maybe, a target would be 145.64, maybe even 147 if we give the thing a bit more time. But it's interesting, isn't it, that it's held once again. Let's have a look at actually trades. Did that trade last week, didn't we? We did that trade on Bitcoin last week. Here we go. So I'm down £2 on Bitcoin, but Palladium got a move on. We did this trade ages ago on this live session. So 29th of March when we did the trade on Palladium. So take a quick look at that. I can see another question has come in and I'll have a look at that as well in a sec. But Palladium did start to wake up last week. So I never traded this before, but I think we just looked at it in response to a question. So we'd had that incredible run in the price of Palladium. Then we had it fall off a cliff. So we ended up buying the 29th of March, which would have been here, the next day after the fall. It's gone sideways since then. But last week, Friday, it got a move on. It broke out. So it'd be interesting to see if we can go back and reclaim these old highs in Palladium and see what happens. Someone's asked for Barratt shares. I'm guessing that's Barratt, the UK developer, isn't it? Barratt Developments. There we go. Property developer. Let's have a look. Let's take a look. Oh, it's interesting, isn't it? they're funny, these developers, aren't they? So I think, I mean, clearly, well, to me anyway, that correction is over from up here, looking something like that. That was the breakout, and that trend has been in place since 2017. So we were, when was it in 2017? October. So we were a good 15 months into that. It's a shame, I think, we didn't get a move back and a retest and a swing up. It just broke out and has gone off like a rocket, relatively speaking. So I think in the short term, it looks positive. I don't know if I want to be a buyer now. If I was a buyer now, arguably the tightest I want to stop between below these lows from March at 580, or maybe a bit further down at 540. But it looks positive. But I think maybe the better opportunity is if we get a decent sell-off and see if these old lows hold. Oh, they're all coming in now. Snapchat shares, Snapchat. And of course, everything's gearing up for the what's it float, isn't it? What they called Uber float in May, I think it's coming. Snapchat, that's crazy, isn't it? Crazy market. So they came to the market. It looks like about $27 a share. Traded as low as $5 a share. Would you sell? Would you sell now? I think if you did. I think the problem I always have with shares like this is that they're so volatile. It's where you place your stops, isn't it? If we looked at the trend, look something like that, you could argue that trend is still up, right? These old lows are holding at $10.40. Okay, so for me, I think maybe in the short term we get another push back up towards 12, and maybe if you really wanted to go short, that's maybe a better level. Because if I was going to go short now, I'd want my stop loss above these early April highs, above 1260 somewhere. So selling short at wherever they are, 1088. For me, the stop loss is maybe a bit too far away. Let's see what happens today. It wouldn't surprise me if we get, famous last words, a push higher this week. But for me, that trend is still up, and that old support at 1040 is still holding. So I would be more up than down. And Tesla, let's look at Tesla. So Tesla reported their, they got clobbered, didn't they? Tesla reported their $700 million quarterly loss last week, which is wider than expected. And I think this move on Friday is a really interesting one. We were talking about this level in the past, about 240 a share has been a real floor for the price of Tesla. And it went on Friday. You know, if you think the S&P 500 is pushing out to fresh all-time highs, the NASDAQ is on fresh all-time highs, Tesla is on almost on a 3-year low as of Friday's close. Yeah, so you got to think, well, if it can't go up in a market that's going up strongly, something's wrong, maybe. But that break is a major break, you know. And I think we were speculating in the last one we did, if we saw it break 240, do a lot of investors who've seen no growth for their share price over the last few years think about throwing in the towel? So I think Tesla is an interesting one to watch this week. So let's see what happens. It'd be tempting if we got a rally to look at levels to sell short, you know, particularly following the break, because that floor looks to have gone. We're only one day into the floor breaking, but it's going to be interesting. Maybe we get a bit of a bounce back this week. I think the interesting trade here will be if we get a bit of a bounce this week and it turns lower and it breaks below Friday's low. So if I was watching it and wanted to short it, then maybe for me, I'd sit on my hands for a bit until we got a bit of strength, then put an order in to sell. And if that low gets broken, because maybe that will be the real momentum trade here. But let's keep coming back to this week. It's always an interesting one, Tesla. But that is not a good look for the share price chart, I don't think, at the moment. Right, that's it. We're finished, I think. So we'll wrap things up there. As usual, if you don't have an account, you can go to Capital.com/David, open an account. Once that's done, we're doing this free 30-minute Skype session with me where we talk about trading strategies, risk management, markets to trade, all the usual stuff. But for today's, we'll wrap it up there. We'll do it all again on Wednesday. So any questions before then, drop me an email, david.jones@capital.com. You can follow me on Twitter for updates and all that stuff. And I'm at Jones and Markets on Twitter. But we'll wrap things up there. Thanks for coming along, and hopefully see you on Wednesday. And I think it's a really interesting week with all this stuff coming out and with markets a bit more volatile. as of the end of last week.